If you've been following NIO, you know their leadership has been dropping some pretty major clues about the company's future. And let me tell you, it's about way more than just rolling out new cars. We're talking a fundamental shift in their production, a really surprising new way they're planning to make money, and a big change in how they think about their business. So let's break down what's really going on in NIO's next chapter.
Okay, here's the game plan for today. We're going to start by looking at how NIO is finally solving its biggest production headache. Then we'll get into their super ambitious plan to make billions from things that aren't even cars. After that, we'll check out the new vehicles they've got coming down the pipeline. And to wrap it up, we'll explore a fascinating cultural shift in how they're selling those cars and spending their money. All right, first things first, let's talk about a massive win for NIO on the production side of things. You know, like pretty much every EV company out there, they've been wrestling with supply chain nightmares for a while now. But it looks like that's all about to change. So get this, NIO has managed to take its biggest production problem and completely flip it on its head. That battery bottleneck that was slowing everything down, well, they're about to have a surplus. We're talking more batteries than they know what to do with. And that, my friends, is a total game changer. And this isn't just some vague promise. NIO's CEO has confirmed that starting in January, they will officially be making more of their high-end 102 kilowatt-hour battery packs than they need for the cars they're building. And these are the big ones, the batteries for their top-of-the-line models like the ES8 and the brand-new ET9. The knock-on effects here are huge. For starters, no more frustrating production delays for people ordering those high-end models. It also means resale values should be a lot more stable, which is a big deal for owners. And maybe most importantly, it means more of these top-tier batteries will be available in their famous battery swap stations all across China. Okay, so with production getting sorted out, NIO is now setting its sights on something much, much bigger than just moving cars off the lot. And this is where their strategy gets really, really interesting. This question really gets right to the core of what NIO is trying to do. They are making a massive bet that the answer to this is yes. And they're not just hoping for it, they're building an entire ecosystem to make it happen. And the target they've set is frankly staggering. By 2026, the CEO projects the company will be bringing in over 10 billion RMB. Just to put that in perspective, that's around $1.5 billion in revenue that has absolutely nothing to do with selling vehicles. So the big question is, how on earth are they going to pull that off? Well, it all comes down to turning their car owners into a true loyal community. As they sell more cars across their brands, NIO, Onvo, and Firefly, the plan is to get all those owners hooked on their NIO Life brand. We're talking about selling everything from clothes and snacks to all sorts of other merchandise. Okay, so production is handled and they're building this massive lifestyle brand. But what about the actual cars, right? Well, let's take a look at the very clear, concrete plans NIO has for its upcoming vehicle lineup. And hey, there's no guesswork needed here. NIO's president has laid out a super conclusive timetable for us. We're looking at the ES9 launching in the second quarter, followed by the ES7 in the third, and then a really important update cycle is scheduled for 2027 for a key group of their cars. Now, you might hear this term, 5556 models, and wonder what that's about. Well, it's not just some internal corporate jargon. These are their bread and butter cars. The ES6, the EC6, the ES8, the models that have historically been their absolute best sellers. And that's exactly why that 2027 update is such a critical event for them. And that brings us to our final piece of the puzzle. And this one is fascinating because it's a real look inside the company's culture. We're not just talking about what they're making, but how they're selling it and how they're thinking about money. So there was this whole drama recently with their new Onvo brand that really tells you everything you need to know. It turns out some sales reps were so driven to close deals that they were actually offering customers cash kickbacks out of their own pockets to steal orders from competitors. The whole thing came to light when one of the reps didn't pay up what they promised. But what's really telling here is the company's reaction, or, their lack of reaction. There was no big public crackdown, and that suggests a major shift in thinking. It seems they're basically giving their sales teams a green light to get aggressive, to do whatever they can to hit those sales numbers. And this new philosophy isn't just happening on the showroom floor. It goes all the way to the top. The CEO himself recently spelled out this evolution in their thinking about what premium service actually means. It's a clear move away from the old idea that good service has to be free service. So what you're seeing here is a company that's really maturing. They're moving away from that classic startup growth at all costs mindset of giving away freebies and spending lavishly. Now, the focus is on making sure every single dollar spent, whether it's on a brand event or on R&D, delivers a real, measurable return. Okay, let's pull all this together. First, NIO is finally solving its core production bottlenecks. At the same time, it's building a powerful new revenue stream that has nothing to do with cars. It's got a crystal clear product roadmap for the next few years. And driving all of it is a new, more aggressive, and more financially disciplined company culture. So when you step back and look at the whole picture, you see a company that's in a major transition. It's moving fast with a ton of ambition, but also with a new sense of discipline. And that leaves us with one big question. Are all these moves building a more resilient, more profitable company for the future? Or are they just a series of incredibly high-stakes gambles? I guess only time will tell.